If you are profitable on paper, but stressed in real life because you cannot pay suppliers on time, you are not alone. Late payments are one of the biggest cash flow pressures for UK businesses. Research linked to the Small Business Commissioner and government analysis has estimated that around 14,000 businesses close each year because invoices are paid late. That is not just admin. It is a strategic risk. Here is what is really going on. Most cash problems are timing problems. Your costs leave your account on time. Payroll does not wait. VAT deadlines do not move. Suppliers want paying. But your income arrives when customers decide to pay, and that creates a gap. That gap is what people mean by working capital. It simply means cash gets stuck between doing the work, sending the invoice, and actually receiving the money. When that gap grows, three things happen fast. Supplier pressure rises. Decisions become reactive. Growth slows because cash is trapped in unpaid invoices. So the goal is not to chase harder. The goal is to regain control of cash, commitments, and cadence. Here is a simple playbook you can use. 1. Get visibility on one page, not 10 spreadsheets. Every week, you need a clear view of expected cash in, expected cash out, and the gap. List the cash coming in by customer and due date. List the cash going out for payroll, tax, and key suppliers. When you can see the gap and when it hits, stress turns into facts. Facts create control. 2. Split your unpaid invoices into 3 buckets. Invoices due now, say the next 0 to 7 days. Invoices late, say 8 to 30 days. And serious risk, 31 days plus. Not all debt is equal. Focus first on the invoices that change your week, not the ones that just add noise. 3. Fix invoice hygiene. This is boring, but it is where a lot of cash gets stuck. Make sure the purchase order number is correct, if the customer needs one. Make sure the invoice matches the contract and rates. Make sure the right person is named as the approver. Make sure the due date is clear, and attach the supporting documents. If an invoice is not approval ready, it will sit, and you will fund the delay. 4. Stop late disputes. A common pattern is a customer disputes the invoice right before payment, so set a simple rule. If there is an issue, it must be raised within a set number of days from the invoice date. That reduces last-minute surprises and makes resolution faster. 5. Use a calm collections cadence. Chasing should not be emotional, it should be routine. For example, a reminder before the due date, a follow-up on the due date, an escalation at 7 days late, a senior-to-senior call at 14 days late, and a formal step at 30 days late if needed. Consistency speeds receipts and protects your position. 6. Deal with suppliers early, not late. Suppliers usually prefer honest communication over silence. Agree a payment plan early for key suppliers. Protect the suppliers that keep delivery running. Do not spread tiny payments across everyone if it damages trust. And when you promise a payment date, stick to it. 7. Pause growth decisions that increase cash pressure. When cash is tight, leaders often do the wrong things. They take low-margin work just to stay busy. They discount to win revenue faster. They add headcount before receipts stabilise. If receipts are unstable, growth must be controlled. Cash is not a feeling, it is a constraint. Here is a quick control check. Do you have a weekly cash view you trust? Do you know your top 10 invoices at risk this week? Do you have a clear escalation path for late payers? Do you know which suppliers must be protected first? And are decisions being made from facts, not panic? If any of those are a no, cash flow is driving you, not the other way around. At Butterfly, we help leadership teams regain control quickly by building a clear weekly cash and commitments view, tightening the invoice to approval flow, and setting a practical cadence for collections and supplier management. Where specialist support is needed, we can also coordinate introductions, but the priority is always the same: control first. This is information only, not financial, tax, or legal advice. Hope that helps.